Hello my loves and welcome back to my Anastasia Finance YouTube channel. Today we are diving right back into the basics of finance with chapter 1.3L from my Financial Freedom Foundation Level 1 Debt-Free Formula course. In this video we are going over directions for money allocation, which is percentage splits. And without further ado, let's get into it. Chapter 1.3L, Debt-Free Formula, Step 10, Directions for Money Allocation, Percentage Splits. Now that you've figured out your net worth, your income, your cost of living, expenses, and your cash flow, it's time to figure out the allocation of your income in order to begin to pay off your debt. First level of allocation. 1. 10% of your money is yours to keep in a savings account you don't touch, called your Eternity Savings Account. Save up a minimum of 3 to 6 months of savings in this account, or you can save up to whatever makes your heart content. But remember not to touch this money, no matter what. If you have to pretend it doesn't exist, or if you have to add friction in accessing it immediately or restricting your access to this money with penalties because of the kind of account you're saving it in due to you having poor impulse control, do it. Eventually you'll be able to control your impulses because you'll be rewriting the pathways in your brain when it comes to maintaining your savings. And when you have the discipline, you won't need separate bank accounts with extra friction and penalties to keep you from dipping into this account. This is to put you in the mindset of being a saver instead of being in debt, and to start your wealth building journey. 2. Dedicate a minimum of 20% of your income to paying off your debt. 3. Remember how I told you to list all of your debts from smallest to largest here and make a note of all the interest rates for each one and the minimum debt repayment for each? Well, now is the time to put that information to use. A. In order to have a snowball effect of paying off all of your debts that lights a fire in you, start with making a minimum payment on all of your debts, and then using the remaining of the money you dedicate to paying off your debts every month towards paying off the debts in full as quickly as possible, from the smallest to the largest. The reason why we're not paying off the biggest interest rate debts first is because the more you knock out paying the small debts in full as quickly as possible, the fewer debts you will have, and the process will feel very rewarding and motivate you to knock out the bigger ones. Think of it like a video game. You beat the weaker enemies first as a way to gain skill in taking on the stronger enemies. These debts are your enemies draining your wallet, so knock as many of the weaker ones as quickly as you can to gain the skills and experience to take on the stronger ones. You can do it. I'm going to give it a 2025 update here. So this is my personal preference, and this is what I think will work for people. But if you are somebody who prefers to pay off the debts that have a higher interest rate first, that is okay. Remember guys, this course is just a guide. Take what you want, leave what you don't. Do it your way because your way is the best way, because it's what works for you. Okay? Remember that. Now, moving on to the next point. Okay. 4. Live upon 70% of your income and never let your cost of living expenses exceed 70% of your income. A. List your expenses from the most important necessities to the least important necessities. Then list your expenses from your most important desires to your least important desires. The list of desire expenses go under the list of necessity expenses, but there has to be a distinction between the two because I mentioned in this course already that it's important to know what is a necessary expense versus a desire expense, partly so you can protest against your cost of living increasing due to adding unnecessary desire expenses. Hopefully you have the money you need to pay off all of your expenses, but if you don't, you need to start looking at the desire expenses list and looking at where else in your life you can make changes in order to reduce your cost of living to be far below your means. You can't be living above your means. Living far below your means is the way to get ahead instead of just living within your means. 2025 update. So, I would like to challenge you to the idea to put this seed in your brain to increase your income so much that you are investing 70% of your income and living on 30. Yeah, or even better, invest 90% of your income and live on 10%. Or even more drastic, why not Let's go there. Invest 99% of your income and live on 1% of your income. I'm just putting this out into the universe for you and planting that seed in your soul because you never know what is possible. This is something that nobody told me until these kinds of things happened to me, which is, it's not just about preparing for what can go wrong, but it's also about preparing for what can go right. The possibilities are endless. So I just want to put that in your soul, that beautiful little seed. Boop. Okay? Now let's move on to the next point. 5. If you can dedicate more than 20% of your income to paying off debt and decrease the 70% of your income for your cost of living, even better because that helps you get out of debt faster. Just remember to enjoy life too, and to enjoy life in a way that doesn't hinder you financially. 6. Remember to set aside money for your taxes based on the laws of where you live. You can hire a financial advisor, CPA, IRS enrolled agent, or tax accountant who knows your exact situation for that, and there's a lot of free information online to give you an idea of how much to set aside for your taxes while you search for the right tax person to advise you. 2025 updates. I also just want to mention that ChatGPT exists. I'm not saying it replaces a professional, but you can ask it some questions. It might give you some seeds of where to start, give you an idea. And in general, this is something I haven't mentioned in the course yet, but use AI. I mean, it can help, okay? And take it with a grain of salt. Of course, it does not replace a professional, but remember that AI is a tool that you can use. It can help you become aware of things that you were not aware of previously, okay? Now let's move on. 7. If you're low income, in countries like the US at the time of this recording, they're more lenient about taxing the people who are in the lowest of the low income bracket. So start with a Google search to see what the requirements are for where you live and how much you make. It's possible you won't have to pay or pay very little tax as someone who is in the lowest of the low income bracket. 8. Put $1 in a savings account that is not your eternity account. This $1 in this second savings account is your investment savings account. This makes you an investor in the making and start shifting your mind and life in that direction. Second level of allocation. 1. After you paid off your debt, that minimum 20% or whatever greater percentage amount you adjusted to paying off your debt will be allocated elsewhere, and your entire savings will be restructured for the next level of financial freedom. Again, that's a formula I have for you in the next level of the financial freedom courses I have created for you called the Financial Freedom Fundamentals Level 2 Savings and Wealth Building Formulas. 2. But for now, hyper-focus on these steps for your financial freedom foundation for a debt-free life I've laid out for you already. I don't want you to get overwhelmed by looking too far into the future. Now is the time to get your financial freedom foundation built with everything I'm teaching you in this course. Before I head out, I have to remind you to like, comment, share, and subscribe. Click the bell notification button, turn on all notifications from my YouTube channel, and turn on all notifications on your YouTube app so you do not miss my future videos. I am so proud of you for taking care of your future financial self through watching these videos, and I will see you on my next video next week. I love you so much. Have a wonderful day.